All right, traders, this is Blake Morrow. You are listening to the Morning Edge webinar, and wow, look at the cable, just absolutely getting destroyed following the Bank of England. Euro pounds at 77 pence right now. So this thing is just ripping, just absolutely flying. Now, the problem that I've got right at this moment in time, I'm long, still a little bit of pound New Zealand, and that thing's heading down towards trend lows, which is kind of offsetting my euro pound. Although this is more of a small position because I'm waiting for a breakout above here, but this is actually a little bit of a thorn in my side at the moment. If stocks continue to drop like they're dropping right now, we should start to see a bit of a reversal here. Just because I would think the Kiwi, hold on, Kiwi should start to show some weakness. Let me see something. Ooh, oh, aha, hold on. Let me remove that. What did I just do? Oh, let me remove that. Let me remove this. Hold on 1 second. Bam, bam, bam. Watch this 4-hour candle. Watch this one right here on this Kiwi, especially if stocks continue to weaken. Be careful with that. All right, so hold on really quick. Okay, let's go into the charts. So we're going to go through all the majors as we normally do. So let's go to the euro. So the euro is at 161% extension of its. Hold on, let me pull up everything here. So we're at 161% extension of the yesterday's consolidation. So if you look at like Asia's consolidation here, after North American trade, 161% extension, we hit it at 1192. All right, now, and I don't know if that's going to cap us for today, but like I mentioned a little bit ago, you have to be careful with chasing the euro dollar higher at this point. The reason why I say that is because you've got non-farm payroll tomorrow. Any which way you slice it, you're going to have some. You're going to have some traders that are starting to think, okay, I don't know if I really want to be short a whole lot of dollars. Short a whole lot of dollars from just with the non-farm payroll coming up, just in case the NFP is really strong, just in case, right? Now we could extend it a little further because if you take a look at the September or August highs to the lows here in December, that 618. Here, let's get rid of some of these fibs. I'm just going to remove them just to clean up the charts a little bit here. Okay. So the 618 comes in at 112.50. That's always doable. I'm not. It's doable here. I don't know if it's going to be able to actually get there today, but there's obviously a lot of downside momentum with the dollar right now. So making it to there, it can't be ruled out. It can't be. I'm going to go ahead and write it down. I just don't know if we're going to be able to have the gusto to make it up there. So 112.50. Now let's talk about more on like support, because let's imagine the euro dollar comes back down, feels a little bit of gravity between now and tomorrow, which could happen. All right, you realize tomorrow's non-farm payroll. It's obviously very overbought. Look at this is the 4-hour. You're in really overbought scenario. The hourly chart's really divergent as you hit this 161% extension. I think that the likelihood of a pullback in the euro dollar probably not that far off. An expectation. Why is that not? There we go. An expectation of a pullback in the euros. Like I said, not too far off. I don't think. Now, I think if you expect just a move to 1150, That's not a very large expectation. I think, maybe a move back down towards the, you know, what is this, 111.15, maybe all the way back to 110.70. It's possible. Now, I know you go, we're at 111.90 right now. How about if we drop to 110.70? That's a pretty far drop, but you also have to imagine how far we've gone just in the last couple of days. We've gone from 109 to 112. That's 3 cents. Okay, it's a big move. That's a really big move in the currency market to get almost a 3% move in 2 days time. Okay, so a move back down to like 110.70 can't be ruled out. I think if we get down to 110.70, you have to be a buyer. Okay, but I don't know if we're going to actually be able to do it. Okay, now we have come out of the range environment in the euro dollar, and we have turned bullish. That taking out of the downward sloping trend line has now made this a bullish currency in the near term. All right, just keep that in mind. Okay, the euro dollar is doing some pretty amazing stuff at the moment. And now any dip you have to look at as a buying opportunity. Unless for some reason, and this could happen tomorrow, so I don't want to rule this out, but unless for some reason, like let's say we get a pullback today. So let's say today we close at like 111, which would not be a very pretty daily candle, okay? And let's say tomorrow the Bureau of Labor and Statistics reports some ridiculous number, like we create 240,000 jobs, and unemployment rate drops again, below 6% or whatever. Wherever we're at 5%, right? Hold on. Yeah, so our unemployment rate right now is at 5%. Let's say we drop to like 4.9%, and everybody goes, "Oh my God, that was like the most amazing jobs number ever." We're going to show a really big reversal in the euro dollar, and then I'd be a little scared. I don't think that's really likely, but it's still a risk. I mean, it's not, the U.S. economy has been showing a lot of resilience. I've told you guys this in the past, and I'm going to say it again. A raise in rates is not going to be really negative on the U.S. economy. A raise in rates is going to be a negative for equities and assets, but not necessarily euro dollars at new highs. Not necessarily, in asset prices. So, the reason why I want to mention that is because I don't want you to think that, man, the cables really had a nice bounce back too, huh? The reason why I say that is because I don't want you to rule out the possibility of dollar strength from here. The dollar looks very weak at the moment. Okay, it does, obviously, but that can change, and it can change really quickly, especially with data like non-farm payroll data. That's trend-changing data, the potential to change trends. It's either going to really build on this dollar weakness, or we could actually reverse everything that you see here the last couple of days. So you can't rule out anything going into non-farm payroll. All right, now, like I said, but for today, I think dips down to 110.70. I think that's, worth trading if you can get it to the long side. Now let's take a look at the cable. So the cable, is obviously flip-flopping all over the place at the moment. But if you take a look at the pound stopped at a 50% retracement. Okay, the 50% retracement of the start of the fall, okay, to the lows. We completed our inverted head and shoulder pattern. It's done. 50% retracement is at 146.54. We hit that yesterday almost to the tick. We went as high as 146.48, almost to the tick. Tried to, get above it earlier, and then, rolled over. Right. So the interesting thing about the the pound dollar, is that that's really key resistance now. And so if you're, wow, the pound's right back above 146. I might short it up here. Actually, I take that back. Carney's speaking right now, right? He's about ready to speak. I just shorted it at 146.11. Okay, because if you're going to short it up here, you keep your stops above these highs. Like I said, I just shorted it just moments ago. So 146.64, 146.65 is resistance. 146.65. That's resistance. Carney says the whole MPC thinks next rate move will be up. Well, okay, of course. The next rate move will be up, right? But when? 2018? You know, is it? So anyway, that's why the cable's bouncing back. All right, so I still think the pound's in a range, right? Wow, we're up in the, wow, cable's ripping. Uh-oh, hold on. I'm gonna have to manage this one. Hold on. I'm not adding anymore. I'm just scalping pretty small positions, but it's all right. Okay. Anyway, support now for the cable is going to be that spike low. God, that spike low is 145.30. Jeez, we've already rallied 100 pips. Okay, 1.4530 is support. Okay, let's go over to the Swissy. Now, if you guys haven't noticed, the Swissy is still really, really strong. And you might go, what do you mean, Blake? It's below parity. I know it's below parity. But if you want to buy a dollar pair right now, this is probably the dollar pair you got to start looking at, because look, the Euro Swiss is flying. We're at 112 right now, right? The Euro Swiss is at 112. The Euro Swiss is at 112. The dollar Swiss is holding up pretty damn well. Now, we did break down through that trendline support. I honestly think we're going to have an opportunity to buy the dollar Swiss probably at 98 cents over the course of the next couple of weeks, but that's my personal opinion. But let's see where support might be here today. What's interesting about this Swissy too is we rallied back to challenge the underside of the trend line and then reversed. So resistance is 1.0. Things are so volatile right now. Ooh, wow, support's right here. 99.60. Well, I'm tempted to buy it right here. Okay, so 99.60 is support. This is the 618. Hold on really quick, guys. It just it's starting to bounce already. $99.60, I think that's going to be key support for today. Resistance is 1.0070. I did not buy the Swissy yet. I think I just missed my opportunity. Grrr. Range. Okay, dollar yen. Here's the dollar yen. So the breathtaking move that we saw in the dollar yen yesterday, I mean, 117 obviously blew away my expectations considering I got out of my short like at 119 and change. I mean, we dropped to 117. I mean, who would have expected that? I mean, that was crazy town, right? So we dropped pretty aggressively through to 117. That's going to offer support today. Now, also keep in mind, guys, that stocks look weak at this moment. All right, if stocks continue to look weak, there's a chance we could test this 117 level. All right, that is going to be a pretty key support today. I'd say that, and why I say that is because, um, you know, it, people probably expect the dollar yen to continue to resume its uptrend. Okay, continue to continue to resume their uptrend because the Bank of Japan's actions this week. But I look at it right now as being a real big risk that we just go flying through 116, and I don't have any yen exposure. I don't. Okay. Um, Resistance right now is the overnight highs or the spike high right here, which is 118.23, 118.25. We're in a range still. Okay, come on, pound, come back down. I'm only down basically 10 pips. Just sitting in it. Okay. Carney's still talking. Damn, Carney Sada. All right. Here's the dollar Canadian. So, like I said, I managed to pick up the dollar Canadian about 30 pips ago, but this is going to be really key support. Even if we break into new lows, 136.31 or 136.30. That's going to be key support. It's a 38% retracement. If you guys are late and you're not seeing where I came up with that, it's the low from 2015 to the high of 2016. We're at a 38% retracement. All right, come on, pound, back down. Go, 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 go. Resistance on the way up for the Canadian. Let's talk about it. This Canadian came down a lot more aggressive than I thought it would. Obviously, I would have stayed short the dollar Canadian. I got out of the dollar Canadian yesterday at like 137 something. I think it was like 137.50 or so, somewhere around here. So this consolidation that you see here yesterday, I got out of my short somewhere around here. After we got that like long wick, I said, all right, I'm done with it. But I didn't think we'd get another leg lower, which we did. Right now, any bounce, I mean, this right here, I would say is a congestion area. Well, here, let's do it like this. This is all really a sell zone, but okay, that's really all a sell zone. But a bounce back to 138, which would be here. I should do it like that. 138 would be the upper end of that sell zone. So if you can get a bounce back to 138, it's probably not a bad place to be on the short side. Again, if you get a big bounce like that, I'd be really happy if we get up to 138. But I'm just saying that 138 is going to offer really probably pretty key resistance on the way back up. We are now in a range. We have been in a range for a while. We went from being in a bullish trend. Once we dip below 140, we're now in a range, so we're in a range environment. You got to start looking at these dips as being longs. Moves up here to 139, 140 is probably being a good short. Okay. Let's go into the Kiwi. So the Kiwi, keep an eye on this Kiwi dollar. Here's a 4-hour candle. Keep your eye on this because if we break back below this breakout point, that's going to be pretty bearish. Just in my opinion. That high, 67 cents, okay? That's really good support today. the resistance, I mean, I don't even know if that's good resistance up there. I have to write this down as near-term support because, like I said, if stocks continue to weaken, you know, we can break through that. But where else could we go if we drop through that? What's the low here? 66.40. Okay, so okay, 66.40 would actually be the critical support on the way back down. All right. Resistance. I'm going to write down the 786 because I think it's still doable that we make our way up here. Okay. It's a really jacked up looking head and shoulder pattern, but I want to see where this completion would take us actually. See the completion. When I say completion, this is, like I said, this is a jacked up head and shoulder pattern, but it's still one, so you can't really, you know, dismiss it. So you got this, right? Or you can extend it a little bit. But regardless, if it finishes up there at 67, 65, so, oops. It's going to be a key resistance on the way up. We are in a range, big range. All right, guys, I'm going to put you on hold. The cable's still holding on to its gains here. I'm surprised the cable came all the way back. I mean, it bounced 100 pips off the lows. 125.30 all the way up to 146.16. Man, it's a hell of a comeback. I think a lot of that's because the euro dollar is so damn strong too. You know, just food for thought. Dollar Swiss is at its lows, coming into a support. Looks like stops above 112 are going to get taken in the euro dollar. That seems doable just because if I was a market maker at a bank like a Barclays or something, I'd be gunning for the 112 stops and then reverse it right after that. That's what I would do. I'd try to push the market as much as I could here because you need to stop out a lot of retail traders that are trying to fade the euro right now. Anyway, okay, I'll be back in a few minutes. When I come back, we will we'll continue on with the Aussie dollar index, peso, everything else. Don't go anywhere. I'll be back in a few minutes. All right, traders, this is Blake Morrow. You were listening to the Morning Edge webinar. We obviously got to finish up what we started here with the majors. Let's go over to the Aussie. We still have a lot of analysis to do, and I've got a lot of questions to answer. So here's the Aussie. Aussie's at the 786 retracement. Now, here's another thing about the Aussie dollar, which I think was really important. We came out and we took out this underside of this trend line, and once we did that at 71.40, you know, it obviously launched us up. Now, again, we're at the 786 retracement. You might even take it from like the very top of the trend, and we might have a little bit more. However, okay, let's stop here for a moment and let's think about what we're doing. Let's go over to the daily chart, okay, and I'm going to be a little bit less excited about what we're seeing as I point this out, okay? Let's copy that. All right, now do you see what's happening here? Actually, let me remove that. Let me remove that. Let me draw it like this. So before you go, oh man, you know, look at the Aussie. It's going, you know, Aussie's going to new highs. You know, back up to parity for the Aussie. Yeah, before you get too excited about that, you know, you got to start looking at this. You know, Aussie dollar is still, you know, locked in, you know, really a downsloping channel. Okay. Now, obviously we still have some room to go. I mean, if you look at where we're currently at on a daily chart, we got a lot of room up here where we can make our way back up towards some resistance. But I just want to point out, those few things that I think are going to be important as we, especially as the dollar continues to weaken, which I think the dollar is, obviously showing some major signs of weakness at the moment. So highs to lows, 161% extension, we're there. If you guys want to short the Aussie right now with stops above the highs, it's worth a shot if that's what you're, going to do. Like I said, I'm shorting the cable right now. I'm long the Canadian. Holy crap! You guys see what the Canadian's doing? Wow. Hold on. We just are flying. Oh my God. Hold on. I might just take my profits off the table now. Oh, Jesus. Look at this thing. Oh, hell no. Look at the hammer. Look at the hammer that's being created on the 4-hour chart. Look at that thing. Oh my God. Oh, look at oil. Yeah, oil's rolling over. Holy crap. Thanks, Anders. Hey, how many of you guys are long the Canadian? Anybody get long the Canadian this morning? Holy crap. Yeah, a couple of you guys did. James says so. Man, look at that. Dude. That, I hate to, let it go a little early here, but it's a big, I mean, to be up 70 pips in an hour and a half. Okay, anyway, I'll stick around on that. It's not of my concern. My bigger concern is to see where the euro dollar ends up. Paul Franco, by the way, just so you guys know this, Paul was saying, hey, on the webinar, he talked about 112.12. We are almost there. We are almost there, 112.12. And oh, we're so close. Anyway, yeah, gold's continuing higher. All right, we got a few things going on. I'm sorry, I got to get back over to the Aussie. So let's go over to the Aussie dollar. (161% extension). What's today's high? Today's high is 72.33. 72.33. So I'm gonna write down 72.30. I'll write 72.35. It's not great resistance, it just is resistance. We are in a big range. Don't forget that we're in a big, big range here. Support. I'm not short the Aussie. I feel like I should be short the Aussie, but I'm not. If we break through the 71.90, this support will be probably really critical here. Right through here. Right over here. Over where? Right under there. Under where? Okay. 71.40. Remember that big that was on the way up? Remember this? Okay. So 71.40 is going to be a big deal on the way back down. Okay. This cable's still strong. Jeez Louise. Okay, let's go over to the dollar index. So the dollar index, we broke the 200-day moving average yesterday, or today, excuse me. So here's the 200-day moving average. Okay, it's right here. All right. Um, let me delete a few things. Okay. This is all really important because if the dollar is going to recover, it has to do it today. I think it's so important that the dollar, if it's gonna rally back, rallies back today. The reason why I say that is because this trend line right here, you can see it, that this dotted trend line, that 200-day moving average, we have to end up posting some sort of false breakdown. If we end up posting a false breakdown, then that gives us the chance of retaining this bullish structure in the dollar. Okay, gives us the chance to retain that bullish structure. However, I'm not too excited about it. I really am nervous that the dollar is you know being, oh, you know what, hold on a second, hold on, let me shoot, we still have a little bit of distance to travel and be okay. Huh. That's the actual dollar index. This is the trading view compilation. So that trendline support comes in at 96 and a quarter. We're at 96.48. So you know what that means? That means the euro dollar could actually get to 112.50 and the dollar index still be okay. Look at the dollar Canadian. Holy crap. Hold on, I'm just kind of thinking what I should do here with the CAD. Nidish was in our chat room, said, I'm exactly with you, bottom tick that thing. That's awesome. That's so great, Nidish. Nidish is from Singapore. Love having him around. It's good stuff. All right. 96 and a quarter. I'm going to write that down. 96 and a quarter. 96.25. It's really important support. 96.85 will be resistance on the way back up because right now it doesn't seem like the dollar can really move from here. But I'll tell you, if we come back and we start taking out some of this resistance, it'll be probably a pretty decent um, reversal. Okay, so 96.90. I'm going to write that down. Just keep your eye on that today, because if we make it back above that, if it makes it back above that, then you're going to start to see a squeeze. Now I wrote down range, and you guys know why, right? Because if you go to the daily chart and you zoom out, okay, we're still in a big range, and we're actually still in a bullish wedge. I mean, we haven't reached the bottom of that wedge. I know it's hard to, it doesn't feel that way where we're at right now. You go, oh my God, that doesn't even seem right. But we are really still in a range. Sorry, I'm just thinking about something at the moment. I'm actually considering shorting some Kiwi soon. Short a little bit of Kiwi here. I'm going to short a little bit of Aussie too. Just some little half-size positions. Hope to be out of these here within a little bit. I shorted the Kiwi at 67.17 and Aussie at 72.08. This right here. Do you know what kind of pattern this is? I'm going to ask you guys if you know what this is. Do you guys know what this is? It's a monkey pattern. You guys know it's the monkey pattern. It's a butterfly. Could extend a little further, but I think we're, you know, with the euro dollar resistance, the pound's unable to take out new highs. I think this may actually be done. So it's a butterfly. Fly, butterfly, fly. Sometimes they tend to overshoot like that, but that's fine. Okay. Let's go into, what was I doing? Oh, peso. So I got out of this thing a little too early, right? Now the peso is spiking higher. Why? Oh no. Dude. Okay, so stocks are coming off, right? You guys watching this? As stocks sell off, watch this. Hammer at 18, breakout point, stock selling off, no likey. Peso no likey when stocks go down. Okay, 18's huge support for the peso. I wasn't even watching it. I should have been, but you know, kind of focus on everything else too. 18.00. It's key support. Resistance. It's hard to say. $50 retracement right here at 1830. That was that support right through here. It's 1832. You know, it's still in a bullish trend, guys. Well, it's above 18. I hate to write that down, but it really is. You know, I know I've been saying that for a while, but as long as we're still above 18, I don't know if we can really write off the peso just yet. Especially if the market gets risk averse. The market gets risk averse here, and you know we'll probably rally pretty significantly. U.S. dollar, Norwegian krona. 50% retracement, horizontal support right here at 845. Here, this is new support right there. See it? 845, 860. I think we can say that we're kind of moving back into a range here. Let's go over to the Swedish krona. And yesterday I shorted this, and I didn't stick with it. I made just a little bit, and I did not stick with it. But I mean, the euro just continues to blast into new highs, guys. I mean, so as the euro continues to hit new highs, this 32 should offer support. You know what? I'm not going to deal with that right now. I think there's too much happening right now with the rest of the market. You know, rest of the FX market at the moment. So here's your bias chart, and things are so busy this morning. Give me 1 second here. Come on, cable, come back down.